skipped out on October. Got a little busy, but we got November. We got things to chat about. Where is this? So yeah, I do want to briefly go over October, and then I'll move into November. A lot of things are obviously a little bit different now, but okay. Anyway, hopefully all doing well. So last month I bought some Google Snap-on and SCHD. I realized I had like an epiphany. I realized that I've been keeping, so what is it, in October? No, I guess I'll go to September, that's probably the better thing. September, I had about 13% cash, and then it occurred to me that money is literally doing absolutely nothing in the portfolio if it's in cash. If I have any cash, it should not be within the stock portfolio itself, it should be in the high yield savings or in a bond, literally anything else. It should not be cash because it's not yielding anything when it's in the stock account. So my new rule is like, I'm not gonna say 0%, but maybe like below 5% cash, maybe like 2.5% is the maximum percentage of cash I want in my portfolio in the stock account. I want to be specific, in the stock account, because it's so simple now to take your high yield savings or take some other account and then just move it into the stock account. So you can have this, it's yielding some money over here, doing whatever, and then when opportunities come up, just transfer the money over to the stock account. And this sounds like it should be common knowledge, but for the first, like, I don't know, like 5 years of my investing career, like rates were like 0%, so it didn't matter like where the money was. So it's like just put it in the stock account, and it's just less work. But now it doesn't make like any sense to do that. So definitely change that. No, I'm gonna have no cash in this account. It just doesn't make sense. Again, it depends on the broker you have and all this other stuff. Like I think Vanguard, if you have that, you technically get a yield off that money. But I think for Schwab, it's like 0.01%, something like that. So again, it depends on the broker. It depends on your like account type. So there's a lot of different variables. But for me, it makes no sense. So that was some epiphany that I had. I didn't add any money to the portfolio. I didn't do that. The election's coming up. Actually, I think it's just like next week. By the time this video is out, it'll probably be in a few days. So today's recording date is actually November 1st. Election's coming up. It's gonna be a little volatile probably. So that's to be expected. There might be buying opportunities, however, also might be some selling opportunities if things go really high. Anyway, SCHD, the yield increased. Did I actually make that? Yeah, the yield increased last month. Horizon dividend went up a little bit. Ruger dividend keeps going down every single month, or every quarter. And the yield for VYM, the Vanguard dividend fund, also went up. So I did this before market opened today, November 1st. Intel did have earnings. It's up 6% as of now. It's kind of volatile, so this is not like super accurate, but it's close enough. It's just a point in time. So some things I bought this month, we increased our position in Snap-on. I bought a little more PAAS, Pan American Silver, bought more Google. Then I had to buy some SCHD. Let's see. Okay. Well, SCHD did have a stock split. I think it was like 3-1. That sounds about right. I mean, again, it's not like people make it a big deal. It's not really a big deal. It just split because they just did. It makes it more easy to buy shares. It's not like the thing increased in value, it just split. But they did increase their dividend. Right now my yield on that is almost 4%, which is, it seems not like fake, but it doesn't seem right. So I'm a little skeptical for some reason. Some other big things, Snap-on had earnings, I think shot up. we gotta make a video and go to the charts soon. I try to stay away from the charts, but they're just too nice to look at. Yeah, this thing ripped up, like, it's in the 330s right now, so, yeah, we're up like 20-something%, and it's the biggest percentage of the portfolio. I like the company a lot. It's definitely expensive, but I think it comes with I'm not gonna say it's fairly valued, it's expensive, but I think it's like the best company I've seen in a while, like from a financial perspective. Again, I'm not an expert, obviously, but for me, it just makes sense. We got Exxon over here. The dividend increased to 99 cents per quarter, which is, for me, a 10% yield. I didn't update this, and they, I think, announced it this morning, like right after I wrote this. I was like, come on, but whatever. That's kind of cool to see. What else? I think Snap-on should be announcing the updated yield or updated dividend. So they've been paying $1.86 for 4 quarters. In the last like 5 years, they keep increasing like 10%. So I'm expecting that to come soon. I don't know where that is, but we'll see. SPG also had a small dividend increase. They're paying $2.10 a share. It's a 5-cent increase from the previous quarter. But it's like, yeah, they keep increasing it. It's up, what is it, 20 cents since last year, so pretty sweet. But this will never be a qualified dividend, I'm pretty sure, because it's a REIT. Anyway, let's get into each stock. I think I'm gonna zoom in a little bit. We don't need to see anything over here. And again, we gotta hit the chart soon. But that'll be for a different video. I want to do specifically a portfolio update. So Snap-on, we got 25 shares at 270 roughly. It's about a 2 3/4 yield. It's about 20. I'm up about 22%, and it's basically a quarter of the portfolio. I don't feel over leveraged because the company is just good. Like, I like the company, so I don't really care about this. And that's not because it just increased in price. Like, I think I had that with Intel. Like, it all went up, and I was like, I love the company, but it's a little bit different. I think with Snap-on, or gotta be careful with my words, but I'm okay here. I'm not. So it's right now it's at 330. Like, I don't really want to add here, but it's tempting. So I think it's definitely very oversold. And it's right off earnings. They're probably gonna announce the dividend. It's probably gonna go up, but I'm hoping it pulls back. I gotta look back at I gotta put the valuation actually. I think we got it like back here. I've been slacking on this stuff. It's just that, yeah. I gotta figure this out. I wrote this so long ago. Actually, was this their year end? No, I think it was. No, this should actually be their year end. I gotta make a note for that. Anyway, I like the company. So we got SCHDs, the next biggest one, 189 shares, $24.50 roughly. It's almost a 4% yield. We're up 15%, and it's about 15% of the portfolio. I do want to increase this percentage or increase VMY, just get those ETFs a little bit higher. But it just, like, I don't know, it seems off. It seems like it should be going down, or I don't know. I think there might be some buying opportunities soon, so I don't want to keep buying, but anyway. I like that ETF. It's just what they do, what they buy, and how they manage it, I think just makes sense to me, and it fits my investing needs. And again, you can read that prospectus online. Just go to their either website or it's publicly available, obviously. I got Exxon, got 40 shares, or like just under $40. This is now a 10% yield as of like this morning. We're up 195%, and it's about 13.5% of the portfolio. I'm still tempted to add here and there, but the main reason why I'm not adding, this is probably bad, is because I like to see this number, the high percentage and the dividend. Probably not the best reason, but it's nice to see. If it goes back to like $100, I think I'm tempted to buy it. They did have earnings Intel. So actually, yeah, it did. So I got 140 shares now. I did buy 10 more since last month. I kind of broke my rule what I said I was, but it's so low, and I kind of wanted to average down. So we're down to $40.60. We're still down like almost 50%. It's a big percentage of the portfolio down. But Intel, it kind of stinks. I was up like 20 something percent at one point, like within the last year. Now back down to 50% as we were like 2 years ago. So this thing is just a wild and unforgettable ride. They got earnings today. Actually, a lot of my companies I own, they got earnings, but they got earnings today. They're up like 6% as of right now. Probably gonna go back down, just how it is. But it's been sitting in this low period for like a whole quarter, and I feel like I gotta make a move here. I shouldn't just sit at this like $40 like mark, you know. I should either average down, sell out of it a little bit, or I don't know. It's tough. It's tough owning like a good or a decent company, in my opinion. It's getting hit in a good sector. Like it just stinks. I'm tempted to buy more, but I want this percentage to be less. But I don't know. This is a tough decision. Tough. Got some Google, been picking up some more here and there. Got 13 shares now at $163.74. It's a very small yield. That probably will go up in the next 5 years. I mean, I gotta be patient, but I'm gonna start accumulating Google. I think Snap on SCHD, Exxon, and Google, I want to be the top 4. The company's good. I should never have sold when I bought it like at $100. But made a huge gain, but now I'm back in, so it's like, did I even gain anything? We're up about 5% now. It's about 6.5% of the portfolio, but will be increasing. I think Google, even now, is still pretty fairly valued. It did have earnings the other day. I want to talk specifically about this and go to the technicals, but not in this video. But they shot up on earnings and then just plummeted. And I think that's a very interesting indication as to how the market's behaving at that price. So I think we might see Google at a little bit lower prices, but right now it's at like this like trend line. So I'm not like super mad about buying it, but I would like to see some lower prices. But I think it's actually fairly valued right now. Maybe not fairly, it's expensive, but it's to me, I think it's worth the price. So I'm picking up some here and there. J&J, 14 shares at $150, about 3.3% yield, up about 6.5%, and it's 6.5% of the portfolio. I kind of bought this. Yeah, the last like month or so, it hasn't done a whole bunch. It did shoot up though from like last quarter. So I mean, we are up, but like I kind of not regret buying this. But debating selling, I just don't want these leveraged companies, and J&J unfortunately is one of those. And I get like a lot of the dividend paying companies are leveraged, but I'd rather just dump this into Google and just like not sleep better at night, because J&J is a good company, but I don't know. So debating selling that. I mean, I sat through almost 2 dividend periods. It shot up. I don't want to be like a sporadic investor, buy something and sell it, but I bought it because it was cheap, or what I thought was cheap. I like the dividend. Obviously, I'm in it at a pretty good price, but I don't love the company, I guess, or I don't love the leverage of the company. So I don't know. It's like, would I rather just sell this and own more Google? It's like I've been buying Snap-on for like 2 something, maybe 3 years at this point. I don't really know. It's nice to see the company that you buy, like, just increase in value, but like it's just a solid company, so it's like rewarding. I don't know how to explain it, and this number obviously is rewarding, but like the company itself is, I don't know how to explain that well, but okay, Intel is like similar to, like, I thought it was a very good company, and I still have, I guess, faith in the company. I'm just at a really bad price, but it gotta be patient. It takes time. But this could go to zero. Like, I don't know. But I've been with Intel for like 3 years now. Also, maybe 4. I don't even know. But where's I going with this? I'd rather own fewer companies and own more of it. And then when you're right, you get rewarded for that and compensated. But if you're wrong, it does hurt. Like, this hurts with Intel, but I was right with Exxon. I mean, Snap-on's not that high up, but 20% on a huge percentage of portfolio, like, that's massive. You know? So, like, it's... if you buy, like... Yeah, I guess this is where I'm going. When you buy, like, 20, 30 companies, and they're, like, 5% of the portfolio, and that thing rips up, like, you don't feel that, like, reward in a sense. At least for me, I don't. But when you own it, when it's a larger percentage of portfolio, like 10, 15%, and that thing rips up, and you are more confident on that decision, it feels great because you're like, wow, I made a good decision. I put a sizable amount of my money into there, and I got compensated for that. Now, obviously, this could drop in half tomorrow. I don't know. But based on my understanding of the company and its financial position, that would be a buying opportunity. But like Intel, like again, I was wrong. So it was a huge percent. Like this was like 25% of the portfolio, also at 1.2, and it shoots down like over time, and it sucks, you know. But you learn from those too. So it's like a double-sided blade, or double-sided, I guess, coin, or like blade, sword. Anyway, where were we? Verizon. Got 41 shares at $50, almost 51, like 5 and 34 cents percent yield. That did not make sense. 5.34% yield. Haven't touched this really. Down 17%. It's about 5% of the portfolio. Still, I'm probably gonna dump this at some point. They just have so much debt, and I bought the company because of a big boy yield, and at the time it just seemed appropriate. But big debt, a lot of debt. Simon Property, get 8 shares at $116.55. That's like a 7% yield, up 45%. Jeez, 4% of the portfolio. Not looking to add at these prices. I'm not looking to add a REIT more than like 5% of the portfolio. I think it helps increase the portfolio yield. However, I don't love that space again because it requires a lot of debt. I don't love the business model, but I understand that it's like for like a dividend portfolio. I think a little bit, a percentage of the portfolio like could benefit from that. So that's just my opinion. So that's why I have that in mind. Smith & Wesson, 100 shares, $16, almost 17, 3% yield, down 23%, almost 4% for the portfolio. I would like to get rid of this one or Ruger. In the election coming up, I feel like it's gonna be so volatile. But I'm just gonna keep it where it's at right now. Pan American Silver, got this as a trade. Increased it. I was at 25 shares, now I'm at 35, $21. The yield doesn't matter. I was up 11%. I think at one point we were up like 20. Hold on, let me do the quick math. 21. Yeah, we're up like 22%. But the last week, like shot down like 8%, something like that. I was tempted to take off the table at like 20%, but they got earnings on the 5th, and man, like the gold and silver price was just up so much. I don't want to make this an earnings play, but I don't. Gotta be careful with my words, but like obviously don't know all their margins and all this other stuff, but it just makes, I think for me, if I have to gamble here, like I've held the company for like 2 months now, I think. Yeah, at least 2 months. I think there's a lot more room to the upside, even if they tank on earnings here, so it's worth the risk to me. I think they'll hold it a little bit longer. We'll see what happens. But the price they're trading at and the multiple relative to the gold and silver price to me doesn't make sense. Ruger, yeah, just I gotta get rid of like one of these again, but we'll see. Qualcomm got it as another trade. Got 3 shares, 167 and 22 cents, down 2.5% about. It's 1.4% of the portfolio. This was up like I don't understand. Like every time I buy one of these companies, it just doesn't go up. But this has been trading in between the 161 to like 176 range. The last quarter. Oh man, they got earnings next week too. I don't know if I want to play that, to be honest. I gotta make a decision there. I was up like maybe 5-10% at one point, but it wasn't much. Actually, no, 167, that couldn't have been 10%. No, I was up like 5% at one point, so there's nothing really happened with this. So I might take this off the table. I don't want to play the earnings with this. I don't have any like thesis or anything, you know, any justification to own it. I would probably sell that today. So I'm probably going to sell it and it's going to rip up off earnings, but again, I can't take that risk. Yeah, I don't know if I want to. It's a small position though, I don't know. Anyway, UPS got 3 shares at 136.33, 4.78% yield, down 1.7% and 1.2% of the portfolio. This did rip up on earnings, but just shot right back down. I don't love the company's like finances, but it seems cheap and that yield is high and it's tempting to buy, so that's why I bought a little bit. Debating adding some more. I don't know. I don't love it, but just that's a big boy yield, you know. MRK, 3 shares at 120. This thing keeps ripping down, and I think it fell even more. Earnings down 15%. It's like 1% of the portfolio. Actually, let's see, it's at $100. Right now, they're paying 77 cents a share. I gotta do quick math. It's at a 3% yield now, so that's actually kind of tempting. But they got so much debt due, just like J&J, so I don't mind owning it, just I don't want to own a lot. Hasbro, we got 2 shares at like $47, it's 6% yield, almost 40% gain, and it's like 0.4% of the portfolio. I'm tempted to sell and just get the cash, but it's also kind of nice seeing that like 6% yield in the big P&L, you know, just like a little, like, it's like a little pick-me-up, you know, but probably should sell. Like, I don't really see a reason to own it. Got VMY, got 1 share at 104. You know, it's a small percentage of the portfolio, up big though, but just another ETF to own for the sake of me saying I own 2 ETFs. I should probably increase this, but the yield right now is so low, it's like 2 something. It's like I should just buy a CHD. But anyway, cash, we get like 3%. Again, trying to keep this like below 5. Right now the whole portfolio yield is 3.22. Yearly payout is like about $950. Again, subject to change depending on how we manage it when we buy and sell. The total gain of the money that I put in the portfolio relative to what's like in it now is about 26%. She had 3% cash, 77% dividend stocks, 16% ETFs, and about 4% trades. So that is the portfolio breakdown for the month of November. Moving into November, like kind of mentioned, we gotta see what's going on with this election. That'll change the valuation of several companies. I gotta look more. I want to review like Snap-on's earnings, Exxon. Yeah, I really should do my due diligence. I should read Snap-on earnings. I should read Exxon, Intel's earnings, and yeah, Google. Definitely, if it's above like 5%, I guess. Yeah, if it's like above 5% of the portfolio and I really like the company one and are tempted to add more, I should definitely be reading their earnings. It's more work, you know. I don't get paid to do it, but in a sense I do. Actually, I'm thinking about it. I guess that's a good way to look at it. Anyway, though, hopefully you appreciated the video. Hopefully you're buying some good stuff and managing your portfolios well. Definitely stick around for some more videos. I try to do at least once a month. But I do want to get like a technical analysis video out for some stocks that I've been looking at because, I mean, again, we can base things on the financials, but I think a combination of the fundamentals with the technicals I think is powerful. And just, that's kind of how I've been doing things. it seems to be. It's kind of hard to say it's working, you know, because it's all about perspective and time, and there's so many variables. But I mean, I'm satisfied, I guess, so far. But anyway,